Hello guys, welcome back to another video, and today is Wednesday, and that's the day I would say, from Wednesday on we're going to be having a lot of volatility on the market, and we are right here, we are on Wednesday. Before we start, please subscribe to the channel, give us a thumbs up, share this content with your friend, and remember, if you have any sort of question, just put down in the comments and I will be trying to help you as I can. Don't forget that tomorrow we have the webinar from 5 to 6 p.m. so do your registration on the link below at the description. Now, we've had the CPI, Australia CPI, just this morning, and I have the numbers in front of me. The CPI year over year came in higher than expected for the quarter three, and the CPI quarter over quarter came in lower than expected, and the trim and mean CPI came in as expected, but the previous was adjusted up. Okay, so CPI year over year quarter three is consensus 2.3% and actual 2.8%, so 0.5% higher than expected. The CPI quarter over quarter three, consensus 0.3% and actual 0.2%, so 0.1 lower than expected. And the trimmed CPI 0.8 consensus and 0.8 actual. These did have some volatility on the Australian dollar. Soon as the news, soon as we got the release, the Australian dollar against the US dollar went up, but now is trading down. Okay, so pretty much went up and now trading down. Now, what is most important for those who are trading euro dollar without any pullbacks, as we can see from the whole month of October, we will have some GDPs coming out tonight. So a very, very important day for Eurozone. Now, French GDP, Spanish GDP, German unemployment rate, German GDP, and Eurozone, Euro area GDP, okay? This will be very, very important, and of course we have USA GDP at the night, all right, a little bit later on tonight. So let's start with France GDP. France GDP has no expectations that year over year, but the quarter over quarter is consensus at 0.3%. If we see anything higher than that, that would be great, appreciated. Spanish CPI and the Spanish GDP. The consensus for the Spanish GDP is at 0.6%. Spanish CPI consensus at 1.7%. So if we have both of those higher than expected, this will be even better for the euro. German unemployment rate is expected to be 6.1%, and the unemployment change is expected to be 15,000 change. And the German GDP is expected to be negative 0.1, the quarter over quarter, and the year over year is expected to be negative 0.3. So just to finalize the GDP area, the GDP quarter over quarter three for Eurozone is expected to be 0.2%, and the year over year quarter three is expected to be 0.8%. From the previous 0.6 and the quarter over quarter previous 0.2. So no changes for quarter over quarter three. Now, we've seen euro dollar coming all the way up from 1.12 down to where is it trading right now on the ranging sort of 1.08, 1.07, 1.082. It's ranging on that area. And I've mentioned yesterday on my webinar, if we don't have any break above 108,700, we won't be able to be looking to trade euro dollar higher, okay? Right now, exactly at this moment, I'm looking at the chart, we are in a consolidation, okay? We are on a very clear consolidation between 108,400 to 107,700, okay? This is the consolidation area. If we break to the bottom, we may continue to go to lower 107. If we break to the top of 108,700, then most likely we will continue to go to 109. If we get to 109, that's my sweet spot, and I will be looking to continue to long until we have further notice that, next week on Tuesday, if Trump wins or if Trump loses. Now, that's exactly another point I want to bring here. In my perspective, I will be talking about that tomorrow on my webinar, so stay tuned. In my perspective, Trump win is a little bit factory in already, and we can't use the 2016 elections to be able to actually use this as a model to predict what's going to happen with the market on now. So, you know, if we think about it, in the last 2016 elections, Trump had only 28% or 26% chance of winning, all right? And when the states were getting deliberated one by one, we saw Eurodollar going up. But this is why, the reason is because Donald Trump wasn't winning. Soon as Donald Trump starts winning and coming on the front of the race, then the market continues to go, the market stops going up and goes down. Okay, so there is a completely different sense of right now what are we looking at the market. We're looking at a market that is already coming lower and Trump is in front of the election. If Trump doesn't win, this will be huge for the market. Okay, it will be huge because everyone is expecting him to win already. You know, most of the big banks are expecting him to win. Betting websites are expecting Trump to win, and etc. etc. So it's really, really interesting how this election is very, very unique and different from what we had on the past 2016. Now, this is all I have to say about Euro. Let's move on to the USA area. So USA, we have GDP tonight. Quarter-over-quarter is expected to be no changes from the previous at 3%. We have core PC prices at 2.10 from the previous 2.8. And we have GDP price index 1.9 from the previous at 2.5. And then tomorrow, we're going to have midnight today, just to finish everything. German CPI expected to be 0.2% from the consensus, from the previous 0. And the year-over-year is expected to be 1.8% from the previous 1.6. So really interesting that we are seeing some, you know, compare consensus to previous, we're seeing some sort of resilience now on the euro area data compared to what we were having a month ago. And I do believe that we may have some more space to go lower on euro dollar, but this is another topic for today's, tomorrow webinar. Okay, guys, thank you so much. I hope I could help you understanding what are the topic points for tonight. I do expect some sort of mixed data, all right? Not much volatility happening on the market today. Thank you so much. I see you tomorrow in the webinar, or I see you in the next video. Bye-bye.